Hey y'all, Jason McMichael here with Real Broker, and this is Real Talk. We brought in a lender today. This is Mr. Rodney Duncan with New American Funding. We're going to talk some lending today. We're going to do just a Q&A style, and this is for information for our viewers. So hopefully they'll learn something from what we do here today.
Okay.
All right. We always hear about pre-approval versus pre-qualification. Can you elaborate on that?
So pre-qualification is going to be based off, filling out an application with a lender, and they're going to take basically the numbers you provide and, go through their debt to income ratio, go through the gross monthly income that they provide just by their numbers. And then they're going, look at everything and then basically issue a pre-qualification, which is kind of being approved as a pre-approval. So the pre-approval process is where they fill out the application. They provide all their income documents, bank statements. That way you can really dig deeper into it to make sure all the numbers based off debt to income ratio versus their income matches up to what they're trying to get qualified for.
So yeah, on a pre-qualification, the difference between that and a pre-approval is you've actually got documentation on a pre-approval.
Yeah.
So it's much more productive to get a pre-approval than a pre-qualification, right?
Yeah, because that sets it up a lot better to be approved once it starts going through the processing phase and then the underwriting phase, because the underwriter kind of knows that you've already done your due diligence and done an income worksheet and factored in all those into the file.
Right. So let's go into timelines a little bit. So from the real estate side, we know we get this pre-approval.
Mm-hmm.
I've got a buyer that comes to you, they get a pre-approval from you, and then we go out and we look at homes. And they find that perfect home. We put that home under contract with the seller's agent. What goes into the timeline of the lending from that point whenever I give you that contract?
So once you put them under contract, email that contract to me. From there, since we've already done a pre-approval, we've already upfronted the majority of the documents that we need. So that timeline starts from getting that contract to sending it to set up. Basically, I'm gathering any kind of extra documents, any kind of mortgage statements they might have. If they're self-employed, I might gather some more insight on what their tax returns, things like that.
Yeah.
So from there, we order title work, appraisals ordered, and then, we're basing our timeline to match up to your date of execution on the contract, that drop dead time.
Yeah. So with a mortgage, he said something about appraisals. Appraisals are mandatory through, when you're getting a mortgage. A lot of people don't understand that. So, and that appraisal is just the value of the home. We got to make sure from a lending side, that the value of the home is there, right?
Yeah. So based off whatever loan product you use, FHA, USDA, VA, or conventional, the differentiate is conventional is a little bit less stringent of the appraisal inspection. So, once we get that appraisal back, it's going to inform us what they value that property at and make sure it at least matches the sales price, the purchase price, and what they're trying to borrow.
Right.
So when you put somebody under contract and you advise them to get a home inspection, explain to me explaining to them the difference between a home inspection and an appraisal.
Yeah. So with my clients, I always give them, especially first time home buyers who've never bought a home, even some experienced people, if they haven't bought one in a while, they get overwhelmed with the process.
Mm-hmm.
And so we're very adamant about explaining that process through and through. And you're right. One of the confusions is inspection versus appraisal inspection.
Yeah.
And so we always advise our clients, get a home inspection, because you're getting a Mississippi certified home inspector to go out and look at that home. They're looking for defects that are not they're not guidelines for an appraisal, right? So we're looking at way more detail with the inspection versus an appraisal. And you can elaborate a little bit on what an appraisal inspection would be looking for. And I know that has some, the weight of what type loan it is also has some bearing on what they're looking for.
Yeah. When a buyer gets a home inspection, the kind of misconception is, well, when you talk to them about ordering an appraisal, they're like, well, I've had a home inspection. Like you said, you advise them to get that, and a little bit more detail, that home inspector is there to kind of not make them worry about it, but it kind of lets them know, hey, these are all the things that might come up that might need to be fixed. Where, an appraisal is there to let you know what the property value is, but they do pick out things that need to be fixed. But those are based off what kind of loan program you're doing. USDA, FHA, and VA are, they're a little stringent because they want everything basically turnkey ready.
Right.
Conventional is a little bit less stringent, where some things that might pop up on that conventional, that government-backed loan might not come up on a conventional loan and appraisal.
Yeah. Yeah. And when we do that inspection, we're looking for, any defects that would be wrong with the home, and the appraisal is going strictly off guidelines that are set forth, whether it be FHA, USDA, they're looking for, is all the flooring in there? Do you have holes in the wall? Is your, GFCI plugs, that type of thing. A home inspection is much more thorough. So another thing that comes up a lot, buyers will come to me and they'll say, hey, my credit's right on the borderline. I don't want to have my credit pulled right now, but I know that when I send them to you, you need to have a look at that credit in order to get them pre-approved, right?
Yeah.
So talk about the difference between hard pull and soft pull on credit.
So when the buyer puts an application in, like you said, we got to pull in their liabilities, everything that they pay monthly that is, based off their credit. We do a soft pull to start with. That way, because what that does is that still pulls, 99.9% of their liabilities in. And then, explain to them it's not going to affect you right off the bat. But advise them we are going to have to do a hard pull because that's required for us to run underwriting and then move the, speed the process up after that. But we can kind of explain to them as well, there's a difference between a mortgage inquiry and then getting your credit ran by credit card companies, auto companies, where they run it multiple times. We're only running it one time.
So to sum that up, my clients really shouldn't be worried about a soft pull on their credit because it's very minimal damage to their credit to have a soft pull done. Is that right?
That's right.
And then also, the other thing that people don't understand on that is once their credit is pulled one time for a mortgage, then they can have it pulled multiple times. Is that?
Yeah. You have 90 days. Once that first hard credit pull is done, you have 90 days to have other mortgage inquiries. No other inquiries, but it has to be specifically mortgage.
Yeah. No car inquiries or credit card inquiries. Yeah. Gotcha. Well, that brings us right into our next topic of discussion.
Yep.
What are some things that buyers should never do when they're under contract, they're buying the house, and they're in that loan process?
So once that hard pull is done on their credit report, top things not to do, as they're preparing, they're getting excited, they're ready to move, and that process is going, they're ready to move in that house. They're thinking about new furniture. Don't have your credit pulled again. It will affect the credit, and then we run what's called an LQI prior to closing that will bring up new debt and new inquiries. Don't go out and buy a new car. Don't start a new job. That's a big one. As your income is factored in, we keep updated pay stubs. And all of a sudden, if you start a new job, that sets you back possibly 1 month to 6 months, where FHA, if you're not in this, if you change jobs in the middle of it and you get a whole different career field, you got to wait 6 months. So that's probably the major thing to do, or, not to do.
Yeah. So to sum that up, don't get a credit card. Don't buy new furniture. Don't get a car while your loan process is going on, and don't change jobs. I think one of the most important things they can do is just be honest with your lender and tell them what's going on in your life, because you've got a very big decision that you're making in buying a home. So just be honest and say, hey, this is what's going on. This is what I'm thinking about. And you can advise them on what to do and what not to do.
Yeah, absolutely. Up front, if there's any kind of concerns, it's better to just voice it up front because we can prepare and plan for that.
Yep. So the next thing I want to talk about is a lot of buyers come in and they think it's been instilled in their mind that I've got to have 20% to buy a home. I need 20% down payment to buy a home. Is that true?
No, absolutely not. I know a lot of new buyers when they're, kind of window shopping on Realtor, Zillow, whatever it may be, and they look at that proposed mortgage payment, that calculator they have on there, and it always says 20%. Well, not everybody has 20%, and you know that for a fact. Some people do come in with 20% prepared for it. Most of the time, multiple home buyers, they know what they want to put down. First time home buyers, the majority of the time, I always ask them, have you done some research on different loan programs? And then, I expand on them, let them know from USDA, that's no money down, FHA, 3.5%. And then, obviously VA's no money down as well. And then conventional, where that misconception comes in that you got to have 20%. It's actually 3% based off the median household income or 5%.
Yep. Yeah. So you don't have to have 20%.
Nope. Actually, you can actually get down payment assistance. Mississippi, they have Mississippi Home Corp that offers multiple grants, $6,000, $8,000, and a $10,000 repayable. And they're based off household income. So there's income, semi-strict income restrictions. Now, we have internally 2 extra programs that offer down payment assistance that don't have as many restrictions.
When people buy a home, they're thinking, okay, I've got a principal and interest payment. I've got to make a insurance payment. I've got to make a tax payment. And all these payments, talk about escrows.
Okay, so a lot of them don't understand that. Mm-hmm. They think, they got to make their mortgage. And it's just like, people make credit card payments, auto loan payments, insurance payments that are all separated. They kind of think the same way sometimes. So basically, they always want to know, and rightfully so, if they're not worried about their monthly payment, they probably should be. That way they know they're in that limit that makes them comfortable making that monthly payment and they're not living paycheck to paycheck. And then when you explain that to them, you always want to explain, hey, here's your principal and interest payment. But your escrows are built into that monthly payment. So keep in mind, it's going to have your insurance and your taxes, and depending on the loan program, your mortgage insurance. So when I'm explaining their monthly payment, I let them know that all that's built into one. Okay. And it's all paid at one time.
Yeah, and they'll get that information from you when you go and search for insurance for them. This is a service that you offer. You go and you help them find insurance. Yeah. You pull taxes. Mm-hmm. If the taxes are not readily available online, you call the tax office. And you get the estimated taxes, so we know what our taxes are, we know what our insurance is going to be, and then we obviously know what our principal and interest is going to be, and all that's lumped into one payment.
Yeah, because a lot of times when you pull taxes or you call that county tax assessor's office, sometimes if they don't have homestead, which kind of keeps the taxes lower, you can sit there and say, hey, can I get some proposed taxes with homestead? So you can kind of tell them, this is what your monthly payment is right now. But come the first of the year, you file those homestead taxes, it's going to go down a little.
I heard you mention something there in that last segment about homestead. People don't know that may not know that there's different classifications of taxes. Yep. So you got homestead, you got your over 65 eligibility, some VA stuff that goes in there, some disabled veteran. Mm-hmm. Expand a little bit on that and explain to people there are tax breaks.
Yeah. So Mississippi, we're a homestead state, which means if the seller doesn't have homestead exemptions filed with the county already, that buyer can file it, which means, there is a lower tax, estimation. If you're a veteran with 100% disability, you're waived of all those taxes, so you don't pay property taxes. Over 65, you basically get the homestead qualification plus that age differentiation where it brings it down lower.
Yeah, so there's some substantial savings in Mississippi for taxes.
It's good that you brought that up because we recently had a borrower that was moving here from Washington. Washington State is not a homestead state, so they don't have any kind of exemptions. Even as a veteran, he didn't have any kind of exemptions. So, when they, come to me talking about monthly payments, I was able to let them know that, because they don't have any kind of exemptions up there and they wanted to keep that as a second house and then move here as a primary, I was able to let them know when they file that homestead exemption at the beginning of the year, because he's a 100% disabled veteran, he actually got waived from those property taxes.
Yeah. Mississippi has some really good benefits for property taxes. So if you're thinking about moving to Mississippi, come on down.
So when a client calls you and they say, "Hey, Jason, I want you to be my realtor. I'm ready to go look at homes." What do you wish they would ask you up front before starting to tour those homes?
Well, I think there's several things that go into that. So I want to know what you're looking for. I want to know details about, the home that you're looking for. I want to know what you don't like. A lot of realtors don't like to tackle that, but I want to know what you don't like. Not only what must you have, but must not have, because that helps me understand what you're looking for. And then I think the most important thing is ask me about a lender. If you don't already have somebody that you're working with, and I'm telling you the difference between a national lender and a local lender, there is no comparison, because we have relationships with these people. We can call them on the phone. I'll go to his house if I need to find out what's going on. So it's important that we use a local lender if at all possible. So ask me about lending options, and I can give those to you. When a client comes to you, either I've sent them or they come to you or whatever, and they've already been working with a national lender, give me a couple of red flags that you see in that.
So right off the bat is, you ask them, what kind of loan were you approved for? Well, they didn't really explain it to me. They just told me what kind of down payment I might need. And it's usually a range. I might need, let's say 5,000 down to 15,000.
That's a big range.
Yeah. They don't really give them a specific loan amount. When I pre-approve somebody, I like to tell them like, hey, stay in this range because that's going to give your debt to income ratio a little wiggle room. And then they all, the common consensus, I don't really hear from them. I've tried calling them and I don't get them.
Well, you know what they do? They take the client in and then they pass them along 5 different times to 5 different people. So you don't get to work with the same person. When I send somebody to you, who do they work with?
They're working with me. They only work with me. The only time that somebody might ask them for something is my processor. And she introduces herself, letting them know, hey, this is, I'm the processor on your file. And I'm going to be gathering a few things that I might need before I send it to underwriting. And again, the communication is, I don't have an office number specifically because I don't want them to feel like they might get an answering machine. They have my cell phone. And I always tell them, hey, if you have any questions or concerns at any time, feel free to call me, text me, and I'm there to answer it.
There you go. Local lender it is. Rapid fire. Do not think. Just answer the question. First thing that comes to your mind.
Send it.
Pre-approval, pre-qualification.
Pre-approval.
National versus local lender.
Local.
I need new furniture. I'm going to finance it.
Wait.
New car.
No.
Switch jobs.
No.
If I don't have perfect credit, I can't buy a home.
False.
Hey, if you got questions about something that we did not cover today or something you'd like us to expand on, if you'll comment below and let us know, we'll try to do a video on that for the next time. There you have it. Choosing the right agent and the right lender as a team, very important, right?
Yeah, because you want that you want that perfect, communication going back and forth. That way they know they've got a team. You got a realtor that is there for them. You got a lender that is there for them, and they feel comfortable through that whole process.
I think that's one of the points that gets missed a lot in real estate is how important the relationship between the lender and the real estate agent is, because they are in constant communication back and forth through this process.
It's not just one side doing the work.
That's right.
I'll let you know what kind of repairs need to be done, and you go, that's where you step in, and then you let me know, whatever be up front or in the middle, like, hey, this is what they're needing. This is the monthly payment they want to be at.
Right. So if you're thinking about buying or selling, reach out to us. We're local. Our links are below. Rodney will have his link below. My link is below. So if you need a realtor or a lender, reach out to us. We'd be happy to help you or just discuss anything real estate related. I want to thank Rodney for being here today. Hopefully we've answered some of your questions. If you're thinking about buying or selling, or you just want to talk to a lender or a realtor, give us a call. Our links are below. We'd be happy to discuss anything real estate related with you. Until next time, I'm Jason McMichael. We'll see you later.